using the Option Wizard service, you know that the Option Wizard is a market maker. There is no higher caliber than a market maker. The rest of them are public models, whether they're hedge fund, institutional traders in options, whether it's an exchange, it doesn't matter. They're all retail. This is a wholesale and knowing when to buy. So when the Option Wizard says, hey, buy that contract at the low, and at times you're buying the call, but then at times, let us not forget that Apple had an option value that dropped 21.54 from 23 number that we gave you up here. Okay? And we can clearly see where the numbers are. The Option Wizard has a system. And you must know that the ratio high was 100%. And they were all in at 23.65. And you can clearly see right here that the call was at the high. Not only was the call at the high, the equity was reversing. Remember that the Option Wizard is an expert in the equity market maker and the option as a market maker. He's both. And because he's both, he has the most powerful edge over everyone. And the thing about it is, the Option Wizard can clearly show you that the open interest changes are very, very important on the volume side. And you can see here that when people, there was only 59,000 contracts open left here. And each one of these columns is, you even got to a point on the third week, it was minus 28,000 from its peak of 64,000. And everyone was selling out toward the bottom. Okay, not right on the bottom, but they were close to it. The thing that the Option Wizard wants to make clear, once again, is how he makes decisions. On 9/20, that was the high. On 10/7 of 2011, that's when we hit the low. That's when you wanted to buy the option. The public rides the option from this number down here and sells out all the way. However, the Option Wizard knows that psychologically they move away. They don't want to buy this. They love to buy the high. They love to ride it down. And the Option Wizard knows it. Why? Because he's a market maker. And because he's a market maker, he knows a directional movement and the rate of change between call and put strategy between the public model. When they took 91% out of that 23.65, I was a buyer at this number. And the equity dropped from the values that I showed you. It had a 16.23% correction, because it did. And that was the change in the equity value that populated the loss in the call. And the Option Wizard knows that, because the Option Wizard knew that at the time that the equity here was a reversal on the daily highs. And at the same time, he also knew that at 23.65 that we were going to come down to the $2.11 level I just showed you in the video. Then the Option Wizard knew there was going to be a big gain there, but the Option Wizard knew that the put side had ran the course. And the put side was the first transaction where, of course, people have opinions and people lose a lot of money because of it. An Option Wizard that we are has no opinion. It has none. It's pure mathematical dollar price movement ratios that we have designed. So when we were making a low in the equity, that meant that the put side here, the 410, that was the greatest side of the trade, that got all the value as this call was going down in value, the put side was gaining value. We get to a bottom of the equity and we start buying up and out of the money calls. This is a 410 call that could have been bought. When we changed the movement and had this big rally on the daily chart here, that's when we reversed here. You had to be a seller. The Option Wizard always tells you when to get out, because no one ever knows when to get out. They never know. They might get lucky and buy a put, but when the put's up here and it's time to sell, they don't sell and they ride it all the way back down. In fact, they turn a great gain into a big loser, as you can see there in the 410 put. So they never know when to get out of the put, And they never know, my friends, they never know when to sell this call that had a great move. And the call lost all its value. They never know. However, the option wizard knows one thing clearly, that by using the option wizard format that the option wizard makes decisions on, the option wizard owns and operates its own option market maker platform. And there is 4 weeks in a calendar options expiration. Then there are weekly options expiration. That's why they're broke down in 5 days and then 5 days. And so far we are in 1 week, 2 weeks, 3 weeks, and we are right here on the closing week, is that we're going to go into the last week that starts tomorrow morning on 10/16, and we'll add the new columns, because the option wizard is going to tell you that we are getting very deflated over here in the 410 put. And since buying down here at $2.20, we're back up here. We're not back to the high of where it lost all its value. It's coming back up. Apple reports earnings on Tuesday. And yes, the number will come out good. So this is an options wizard earnings play. And you can see that we have rallied up in the call and we have deflated in the put. And now what the option wizard will do, by using the option wizard market maker platform, is that we're going into the final week of expiration, and we'll add the 4th week here. And each week it will start over the following Monday calendar date. So you can understand that there are weekly options expirations, and there are 1 day, 2 day, 3 day, 4 day, 5 day. They have written weekly options expirations. They never used to be in the market. Back in May of 2010, we had a flash crash. The options market had forever changed for the public at that time. There is no service out here available because not everyone can be an option wizard. They don't have the mathematical formulas. They don't understand the movements. The public options model is a loser, a complete loser. And you can trade these options with the option wizard on a weekly level and a calendar monthly level. And that when we take a look at when the option wizard is making decisions, this is how the option wizard makes decisions. The option wizard does not guess. The option wizard does not speculate. The option wizard does not spend endless hours speculating on which way the movement will be going. In whatever option that the option wizard chooses to trade or put out on the option wizard alerts, you can rest assured that the option wizard is working behind you with a very sophisticated market maker application. And we know by you viewing the video right now that this is quite foreign to you, because you're only used to using a public option model. And the public model has a way of not telling the true story. This is what we use behind the movements, and it's an open introductory to what the option wizard does. And the option wizard is a market maker in the equity, because each day of each equity price movement that populates the call premium, we master this side of the market. Then we apply that side of the masteryship as a wizard in the equity. We are a wizard in the option. So being a wizard in the equity market maker capacity level allows us to enhance our option wizard market making level that other people don't have. If they had this, my friends, the option wizard remains anonymous, because if the public had this model, then how would they stay in business? They're a buyer and a seller of the call and the put at various strike prices. Doesn't matter which one we use, but we are putting this lengthy video together for the new option wizard service that is not open to the public, and nor will you find this public. The public will never find this for sale. No, because it doesn't exist. And the thing about it is, when I move this out of the way, you're going to clearly see that The option wizard has that other format, but the option wizard understands when the equity had a big 1, 2, 3, 4, 5, 6, 7, 8 day run, it gaps down. It made the high reversal here. The option wizard knows at that time to put the option client base, wizard client base, into the 410 put. When the 410 put goes to the high, and we're making a low in the equity, the option equity wizard knows that the low is put in there, that's me, that we're putting the low in the 410 call, and the option wizard knows to put you in the call side. Now, what the option wizard does as a market maker, if I short the contract up here at $57 and I buy it back at 6.25, I just made all the money as the public is holding it down. And at the same time that the option wizard has institutional controls to sell short, just like shorting a stock. If I short a stock here at 50 and I buy it back at $6, we'll do the math. I just made a whole bunch of money. And at the same time, the option wizard is net long the 410 call and putting various strike prices together, whether it's individual equities or indexes, S&P 500, NASDAQ 100, and various different bear and bull option spreads that the wizard uses. Once again, the wizard data, the wizard market making data, this is the data that we make our decisions on, so you know what's behind the decision process. It's not something that you're given or that you're going to get to use. We will use it, and then we will put out the option wizard alert. But we always want our people to know why we're so unique and different, and why we're hands-on every single day. We're a market maker in the equity, and we're a market maker in the option, and the option wizard and the equity wizard work hand in hand, because they do. The public will never buy the low. They will not. When we made the low, we're currently right now from $2.11. You can clearly see last week how we moved. We were, and we are right now, back to 75%. That's 53%. You can see 1455, 1830, and 1357, and it changes right here at 8. It closes at 1820 in this column here from that low, from the low to the high. You can see clearly you can clearly see that there was a 7.75 movement. Okay, now the option wizard has many different levels of services. This is a level of service of alert service that will provide you an entry and understand where your stop market should be, where the markets are mathematically weighted either to the bull side or to the bear side. However, we felt it was our due diligence. The option wizard needed to let you know how he makes decisions and why the option wizard is so successful between calls and put strike prices based on trends. So once again, when I was buying here, the option wizard would be having you sell here and then buying the 410 call, the back end of that trade. And it's simply buying and selling calls and puts. It's not, here, let me sell a put and buy a call against it and let me get a 3% move. No. When that thing lost 1,100, when that call went down 91%, the call lost 1,121% in value. From $23.65 down to the wholesale value of $2.11. That's the premium that was taken out. $21.54. The equity had a reversal of $68.62. This number over here means that for every $3.19 you got a 31-cent premium. And we understand how the premium is either being taken away or if they're inflating premium.